Welcome to the butterfly pattern lesson. In this lesson, we will look at a pattern that is no longer encompassed within the X to A leg. We'll show you the rules to trade it and give you the potential pitfalls. We will guide you through the structure and finally finish things up with another real market example. The harmonic butterfly pattern is an extension harmonic pattern. That is, the D point exceeds the X point and is used to trade highs and lows at key reversal points. It indicates a high chance of probability at the end of a trend, and it offers a chance to get into the trend earlier. So let's walk through this. On your left, you will have your bullish butterfly, and on your right, you will have your bearish butterfly. The first move, again, is the X to A leg. Now, before we had talked about how the X to A leg was the longest leg. This is the initial impulse leg, but in this pattern, it will no longer be the longest leg of the pattern. It no longer needs to stick out like a sore thumb. We just use this as the basis for all other legs within the pattern. Next, we get the A to B leg. This measurement includes a mandatory 786 retracement of the X to A leg at the B point. This defines a more precise potential reversal zone and is more significant for trading opportunities. The next leg we get here is the B to C leg. The C point looks for an AB retracement of 382 to 886. It should not violate the A point. Without a retracement within these ratios, the pattern would not possess the structural integrity to trade consistently. And finally, we will go into the most important point, the D point. The C to D leg has a lot of important Fibonacci ratios within it. The first one we get is the 127 of the XA. Now, some people will trade it all the way up to the 1.618 of the XA, but the 127 of the XA is the most critical of all numbers within the PRZ. Ideally, the 127 would be the lowest number within the PRZ. 1.618 to us is not considered as harmonic, so it is more appropriate that we use this with the crab pattern. The second part is we're looking for a 1.618 to 2.618 of the BC. The best structures would be between the 1.618 and the 2.24. And finally, we are looking for an AB equals CD pattern within this to make it a valid trade. Frequently, the AB-CD pattern within will possess an extended CD leg that is either 127 or 1.618 of the AB leg. The potential reversal zone for the butterfly pattern is defined as follows. First, we are looking for an AB equals CD pattern within it, and it usually is extended. Frequently, the AB-CD pattern will possess an extended CD leg that is either a 127 or 1.618 of the AB leg. Next, we are looking for a 1.618 to 2.24. It can be as high as a 2.618, but for best results, we are looking for a 1.618. And then we are looking for a 127 XA extension. The XA calculation is usually complemented by the extreme BC projection. These numbers create a specific potential reversal zone that can yield powerful reversals, especially when the pattern is at an all-time price level. Since the 127 XA is the most important level in this pattern, we use the 1.41 XA as a stop loss area. So we set our stop loss below the 141 XA, and we use this to separate the butterfly from the crab. So it is just outside the PRZ zone, and again, we are going to look for structure within this area. We will use a tight stop because the CD leg is with the trend, which means that a failure of this pattern can be more dramatic than others, and we'll watch for strong momentum as price enters the PRZ zone. Targets will be the same as we've done before. We will look for the 382 and 618 of the A to D leg. Going through a scenario here, let's take a look. First, we'll have price enter the PRZ zone. Again, the 127 is ideally the lowest number within the PRZ zone, and price will usually respond to that level the most. So price comes down into it, bounces off the 127. Again, we are looking for price action within this area, and then bounces off and goes the other way. We're setting our stops just below the 141 XA, and we're using a tight stop because since we are extended beyond the X point, price can be very volatile within this area. So we want to keep our stops really tight just behind the 141 XA. And then we're looking for the price targets of the 382 and the 618 of the A to D leg. The butterfly is an extension pattern, and no longer are we looking for a retracement pattern. So it can be a little bit more difficult to spot. So let's take a look at this, see if you can find the pattern within this, and then I will show you all the levels. Okay, so let's walk through this. We have our X to A, and I will label as I've usually done. So we have our X to A, and we need to make sure the B point comes in at the correct area, so we'll use our Fibonacci retracement tool. And you'll see that we get a pullback here all the way into the 786, which is the defining level we are looking for at the B point. So we go down to the B, and let's label the B point here. And then we get a little pullback, and remember we are looking for a 382 to 886, and I can just tell you by looking at that, that's at least a 382, so we're good there. And let's label this as well. So that's B to C. And then C to D, which is obviously the most important part. And I will label where this goes. So this would be our C to D move right there. Now let's make sure it comes in at the correct area. So the first and most pivotal of all of them is going to be the X to A extension. So we are looking for a 127 X to A extension. Obviously we can go to a 1618, but the way we trade it is we don't even use the 1618. We only use the 127 because this is the most critical of all numbers to us. So we are right there, and we literally just tap the 127, which is a good thing because it will usually respect this level. So the 127 comes in at a perfect area, and we'll put a little ray there. And then we are also looking for a BC projection of 1618 to 2.618, and let's see where this comes in at. So BC projection, and see where that is. That is coming in. So we have a 1618 to 2.618, and I'll take this off a little bit so you can see that we have a pretty wide area. Ideally, we are looking for a 1.618 to 2.24. You can see the 2 and the 2.24 come in pretty close. So we'll probably pay attention a little bit more to the 2, but since we had no idea where price was going to stop, you could honestly look at the 2.24. But since the 127 XA is our most important, we probably would not pay attention too much to the 2.24 in this scenario. We would look at the 2 to the 127 XA. And then let's see where our ABCD comes in at. Again, we're going to probably go for an extended ABCD. The ABCD can be an extension all the way up to a 1.618. Obviously, we may be looking for a 127 in that, but it can go from 127 to 1.618 ABCD. So let's draw in this last line. Since the 127 is the most important, we can see it comes all the way down into the 127. We would probably drop down to the 1 hour on this since we are using the 4-hour time frame. And I'll label this as the D point so we know where we're at. Again, we need to, I forgot to do it, but we need to find out where our stops would be. So let's go with our XA, and we need a 141 XA, and our stops are going to be pretty tight right behind it. And again, this is just because price can be volatile in this area. And the reason it's volatile, and I'll show you right now, is you can see, ignore all this to the right. You can see as price rallies up, rallies back down, rallies up, and rallies back down. Honestly, people are playing breakouts right there. Okay, because we've set a new low, so we're putting in lower lows, and we could honestly break out, extremely fast in this area, so much so that we could just blow right through this area. So we always want to put our stops just below the 141. That way we're limiting our risk, and we're not taking a huge gamble on something that could really just blow us out. So we would drop down again to the 1 hour time frame on this. And let's say we got our confirmation. We now need to look for our targets. So we have our stop ideally set somewhere just beyond the 141. And I'll remove this because we no longer need it. So our first target is the 382, which comes in at 1.6. And then the 618 comes in at 1.60925. And that is going all the way out to the 5th decimal for you. And then let's look at a risk reward here. So we come in here and I'm going to put it just beyond. And our first target comes in at 2.75 to 1, with our second target coming in at about 4.5 to 1. So these are very good risk reward profiles. And let's just walk through the trade. So we would come down in, we would not, I don't like to put limits on this because we can get blown out. And I like to respect the PRZ zone. I like to let price get in there and see how it's going to react before I place my trade. Some traders will put limits in this area and we could have a PRZ failure. And guess what? We just lost on a trade because we didn't follow the exact rules for trading the PRZ zone. We just put a limit order right in the PRZ zone and didn't really pay attention to price action. So price gets into the PRZ zone. We make sure that it's a good support area and that we get a confirmation. And then we place our trade. And luckily for us, as every other trade that we've put on in this lesson or in this course, it goes our way. So you can see that it rallies up to the 382. At that point, we are moving our stops again. We are rolling them to break even. So now, guess what? I've locked in profit. I've taken off one position. So I'm definitely in the profit. Worst thing that happens is I get stopped out and I've made, 2.5 or whatever it was, 2.75 to 1 on one position. And something must have happened because we get pretty volatile price action here, a quick rally, and then a complete collapse. It probably went all the way down and then we had a rally back. But we saw at least a 100 pip movement right there, and guess what? It came back right to break even and stopped us out before eventually heading back up. Now you may say, why don't I just keep my stop where it is, not move it to break even? And here's my reason, is because if we left it where it was, right, and we get this volatile price action and all of a sudden price falls off the table, well, now I've destroyed some of the profit that I've already earned and I haven't protected myself very much. So I always want to move this up, and the key to trading is we always want to live to trade another day. And I know it's hard to think about, accumulating a bunch of wins to make a big win. We always want that one big one that triples or quadruples our account. Harmonics is more about getting a lot of wins to make a big win. Okay, we're trying to put the probabilities on our side and get as many wins as possible so that we can consistently, over an extended period of time, for as far as we can see in the future, we can consistently earn a profit. And that's what Harmonics is all about, is consistently earning a profit. All right. One more thing before we get done with the market example is in this area, within this PRZ zone. So I'll put a little box around it. One thing that I like to look for and that you don't get a lot of times on a butterfly is support. So I like to scroll a little bit left, and it's going to take a little bit of adjusting here. So you can see that we have really, we hadn't touched this area for an extended period of time. But if you go left, you will see that there is structure, an extended price structure that it bounced off and went up. So this gives me a little bit more confirmation on this extension pattern that this could be an area that we could see a rally out of. The butterfly pattern indicates a high probability of reversal at the end of a trend and allows you to get into that trend earlier. So let's recap the key points for this pattern. First, the 127XA is the most critical of all numbers within the PRZ. This number should ideally be the lowest number within the PRZ. And finally, let's look at the B point. The B point must be a 786 Fibonacci retracement of the X to A leg.